Hello, welcome to Pro Trader Strategies Market Commentary for Thursday, October the 22nd. Yes, it is webinar day. Well, that's a little bit later on this afternoon, but I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets. With some of my market analysis, I go a little bit further for you folks in these daily market commentaries, and I talk about option strategies. Why? Because it is the best way to turn the tables of probabilities into your favor. Yes, a lot of us struggle with directional assumptions. Should I buy? Should I sell? Well, the beauty in options is that you don't always have to have the directional move in your favor in order to make money. And I have proof of that. Yes, I show you guys almost on a daily basis how my directional assumptions are wrong, but I'm still making money. I've been here for over 25 years and continue to turn the probabilities in my favor. That's the only way to get ahead in this game. It's not flipping a coin, picking an option strategy out of a hat. No, we have guidelines set out for you to find the right option strategy for that assumption that you've come up with. And we all know what assumptions mean. All right, so let's get on with the economic data. See how that's impacting the overall markets. Economic data across the pond, pretty light again. They did get Great Britain's industrial order expectations negative 34. Well, it was better than the negative 50 they were expecting. So I guess there's a shining light there, or a silver lining, I should say. In the U.S., we have, one more thing in Europe, we got consumer confidence coming in at negative 16, expected to be negative 15, so a little bit worse than expected there. Here, United States, we've got unemployment claims coming in at 767,000, expected to be 860,000, or 787,000 versus 860,000. So lower claims, better generally speaking. Although we did see the labor force participation at the beginning of the month, which is the non-farm payroll number. That's one of the most important data points for these employment numbers. And it showed labor force participation was dropping. That's why we saw that big drop in the unemployment rate versus people actually being employed. Well, this is probably a little bit of a product of that, right? Labor force participation tells us people are falling off of the unemployment line, meaning they're discouraged workers. If you aren't filing for unemployment and you are unemployed, then you fall off of that statistical data point, and you become a discouraged worker, meaning that you aren't looking for unemployment, but you are still unemployed. Well, if unemployment claims are coming off, it could be due to the discouraged worker. All right, so then we got the CB leading index, which is what we used to call the LEI, leading economic indicator, and they've switched the name here recently. That's been it came in worse than expected at 0.7, expected to be 0.8. So a lot of people might say, hey, it only missed by 1/10 of a percentage point. Well, last month they did revise it up a little bit to 1.4 from 1.2, but keep in mind, it has been trending downward. I think we even had a higher reading the month before than that. So we got a bit of an up move to that high a couple of months ago, and it's been trending back down. So not always a great thing there on the LEI. A lot of that spike was due to the stimulus, and they're still battling it out. It seems like every single day we're talking about this. Republicans and Democrats are really fighting over it. The Democrats want to add some pork to the overall thing, but Pelosi also came out and said that she's not here to get the Republicans reelected. So what does that mean? I don't know. All right, on to existing home sales. That came in at 6,540,000, expected to be 6,200,000. Better than expected there. Another thing we're seeing is second homes for people are really going through the roof. I mean, it's like knocking it out of the park. So that is, I guess as people are trying to social distance themselves, they're thinking, well, I might as well be at the beach or in the mountains or something. So that's been a big driver there for that economic data point. Lastly, we got the natural gas storages coming in at 49 billion cubic feet, expected to be 52 billion cubic feet. There's a couple of things that I've written some notes about. With the we're in the middle of earnings season. Well, just at the beginning, actually. We've gone through about a quarter of the earnings so far, so we got 3 quarters left. Well, that being said, right now we've seen a beat on earnings by 83%. All right, so that's something just absolutely knocking it out of the park. Also, the average I don't know what I was going to go with that that last point, so I can't remember what that was. Also, what was the last one? CMG margins were down. Same store sales were good. I'll talk about that here in a minute. So crude oil, unchanged, not really going anywhere. Nothing to see there. Gold really coming off, and I think that this has to do with, obviously, the stimulus package, back and forth. It was really looking like yesterday they were going to come up with something, and then all of a sudden all the talks fell apart and they went home empty-handed. So gold coming off today. It looks like they might not be getting that whole stimulus package. Bonds falling off also, as you know, that's where the Fed would be supporting the overall markets there. VIX is in negative territory. We've had a bit of a mixed bag at any given point in the day with the equities here. Right now, Dow Jones is off by about 30 points. It's very close to that point of control, finding a lot of support at that 50-day simple moving average, which I had expected to really kind of be a bit of a wash because we've got that point of control right there and that we could easily toggle back and forth around that. But it is showing some support there around that 28,100 level, which is right where we are right now, maybe just slightly below. But that is showing some support right now. Charts are, quite frankly, a bit of a messy setup. There's no real good candlestick setups going on right now at this point. It looks like we're starting to, kind of trend sideways. Normally we would expect, with the earnings beating like they are, that we would see some movement to the upside here. It's just really not happening. We're seeing these guys beat, and the market's just really punishing on their pricing for their stocks, despite the fact that, like I said, they're beating and we're still going down. All right, Nasdaq off 120 points on the day, finding support on its 50-day simple moving average, as is the E-mini S&P. So that 50-day simple moving average, which I was kind of throwing out the baby out with the bathwater, thinking that it was not going to really act as a support area here anytime soon. Well, it's actually showing up as some support there. So we break below those 50-day moving averages, it could very well signal some correction time coming in the equities. At this point in time, like I said, with this chart set up, one could say it's finding a bottom here because we tested that 50-day simple moving average. This candle right here today looks like it's a bottoming type of candle, but it's got a counter-opposing doji right next to it, which usually signals a continuation pattern to the downside. So it's really a mixed bag going on trying to read the tea leaves right now. It's very cloudy, as one would say. All right, so let's take a look at the breakdown of the E-mini S&Ps. Remember yesterday I was talking about it feels like an inside day. It was kind of outside of the normal quote-unquote inside day kind of definition. Well, it ended up being working itself back into an inside day to make it a pretty solid as form of the definition of what we would normally call an inside day. Now, also, with that being said, what we're seeing here today is the point of control continuing to lockstep down from yesterday, which signals a little bit more bearishness, all right? So I doubt we're going to be able to get that point of control to move higher today unless we really see something come out of the stimulus package. All right, so I've talked enough about the markets there. Let's talk about IBM. Well, IBM continues to slide, and I talked about this yesterday with IBM that on the earnings, they did well on their earnings, but of course, nobody likes IBM on earnings for some reason. Wall Street doesn't like IBM on earnings. So if you guys remember, I had sold the October 120 puts in there, which obviously looks like I'm going to get long IBM at 120, minus the collection of 57 cents that I originally got with that trade. So my break even is slightly lower than that. Well, I told you guys, all right, I was taking advantage of this. I wanted to make sure that I could get down there with another good strike location, maybe do some dollar cost averaging if I get hit on those, because I'm still bullish in IBM, and do some dollar cost averaging by selling the 105 puts in the November. I actually got those for $1. So now I'm short the 120 puts that expire tomorrow, probably going to get that stock put to me. There's almost a sure thing, right, in my eyes. So with those no 105 puts, if I get hit on those, you know, we're talking that would be right around well below that 106 area. So I dollar cost average down to about 112-ish, maybe 111.50. So somewhere in and around there is going to be where my break even is when all said and done. Finally, what I did today with this extra move down, maybe finding a little bit of support here outside of the value area low. I think that we're going to see this set up where we have a nice candle here. As you can see, it's a hangman doji at the bottom of this move. That is a nice setup for a bit of a move. Obviously, we need to wait till tomorrow to see if it gets confirmed. But when we see this doji right there, that doji is a bit of a signal. If we were to finish right here in and around 114, 115, that would make it look like we're finding a bottom. I do need to find us a doji that looks like that tomorrow. Hopefully that will signal that that is a bottom and a resumption back towards that point of control. But we probably need to get above 116.71 to really be very confident about that. But at this point, it's looking pretty good. So I decided to go in and sell some more IBM, but I did the November, sold the 120 calls in there. All right. So remember, I'm getting long at 120, probably tomorrow after the close. I've dollar cost average trying to get in with the 105 puts. Well, that's a doubling up of my position. I started out with this very small because I, said I was going to do it with an allocation that I would like to have in my portfolio. If it moved there, I'm still fine with that. Maybe a little bit bigger than what I would normally do by adding on to that trade with the dollar cost averaging. All right, so half of that is where I'm selling the 120 calls in IBM in the November contract. That would scratch me out of my 120 puts that I'm going to have put to me there. Now, remember, I get to keep all of those credits for doing all these collections. So right now, I've got a collection of $2.57. So that lowering my overall break even on these trades that I've put on if I get IBM put to me. All right. Still a little bit vague as to what my break even is all in all because of those 105 puts that are looking pretty good right now. All right, Chipotle. They came out, like I mentioned earlier on. They margins were a little bit down, all right, but it has to do with some of them holding on to employees and stuff like that. And the street really kind of beat up on them for that, despite the fact that they beat on a lot of their earnings that were expected. So Chipotle fell out of bed. Well, I told you guys I was playing Chipotle to the upside. October sold 1,270 puts in there. You can see those were in the money on the open. I was looking like I was taking those home, and I collected a $6.90 credit for that trade yesterday afternoon. Obviously, those were in the money. That was looking pretty ugly for a while there. Directionally wrong. Beat on earnings again. So we're seeing this bit of a theme here where you can beat on earnings, and it really has to do with your earnings call and how you talk on those right now, more so than what the earnings were. And you're going to really have to beat knock it out of the park in order to get your stock to rally after an earnings, it feels like anymore. Anyway, I covered those. I held on to those for a while. I covered them about probably, I think it was probably close to an hour ago. Yes, it was about an hour and a half ago. I was able to buy those back for $3.70. Probably even cheaper at this point. I was happy to get out of that trade for a profit anyway. So I kept my eyes on it. Usually like to cover those right on the open. Obviously that was about an hour after the open. Actually about 2 hours after the open, because I had to hold on to it for so long with the market moving against me there. But on the flip side, Tesla has come off. I covered those right off the bat this morning. That was a pretty easy cover. And what I had done in there is sold the October 375 puts for $3, not quite $3, $2.85. I bought those back this morning for 41. And believe me, I thought I was going to get much better pricing on that, especially with the market opening much higher. It just started coming off throughout the day, and I actually had to rush and chase that trade to get out at 41. So I paid up on that, and I'm probably thankful at this point. That has so much theta decay. I think that those 375 puts are probably still rapidly decreasing. And volatility coming out of all of these trades dramatically helping me, especially like I said, what helped me was that volatility dropped. Despite the fact that the market came against me so bad, the volatility dropped from 44 to 37 was a massive drop, plus the theta decay. All of those things culminated to help me out and offset my wrong directional assumption, which is why we set up our strategies according to my guidelines, you guys. I'm trying to make it easy for you guys to determine what option strategies to implement around any given assumption, because examples like this, wherever it is in that key here, or the video where I am in location to the thing, whatever, is that we can be wrong and make money. I mean, that Chipotle trade, yes, I had to work it. I had to massage it a little bit, but this is all about turning the probabilities in our favor. All right, so without further ado, that's all I've got, other than please check out the webinar. Oh, one other thing was Coca-Cola I wanted to talk about, because I have it in my portfolio since last earnings, and I was long this at $53. Now you can see, nice move, beat on the street. They're actually talking about pulling the whole game around Pepsi, where they've realized that having all of their eggs in one basket being, you know, just the soda pop, they're trying to get more diversification into the snack aisle, which is what Pepsi really has. Most of their product line is in the snack aisle. It's not just in the soda aisle. So, good earnings call from Pepsi. Yes, they have gotten beat up a little bit here throughout the day as there's some profit taking going on. But keep in mind, with Coca-Cola, I've dramatically lowered my overall break even on this. Like I said, long at 53, but collected over a couple of dollars in credits by selling puts, covering calls, and all of that. So my break even is probably in and around where we are currently trading at $50.50. So just wanted to talk about that because I have it in my portfolio. I know that a lot of you guys are playing along there. I didn't do anything to manage this risk during the earnings though. All right, so that's all I've got for you guys. Intel coming out tomorrow morning, so I'm going to probably be playing that one this afternoon. I don't think that there's anything else necessarily that I'm going to be looking at. Yeah, Intel comes out after the close, so I'll probably be playing that one. That's all I got for you guys. Check out the Pro Trader Strategies website, because we're doing the roadmap to trading options. Like I said, we're showing you the guideline. You come up with an assumption, we find the right strategy for that. All right, so check that out. That's all I got for you guys. Thanks for joining me. And if you can't take that, take it easy.